Looks like you've had a pretty decent first half, but in the commentary, you seem a little bit cautious about your prospects during the current period.
Yeah, I think the consumer is under some stress. I think we're starting to bite now is the increases that are coming through from Eskom as well as fuel costs, so that they are infecting our consumer.
And how are they affecting you? Because obviously this is input price increases that you're seeing. Are you able to pass these cost increases onto the consumer through higher prices, or is it difficult just because of this whole supply-demand dynamic?
Yeah, I think sort of looking at the cost base is very important to us, and that's something we monitor very, very carefully. And where we can, we have to push it through, but we obviously look at our margin, and we need to make sure that we get the quality right, and we also get the price right.
How do you manage your margin in an environment like this, where you are starting to see input costs rising, and yet you do have a very vulnerable consumer?
Yeah, I think we need to look at what the consumer's buying patterns are. If you look at our basket, what we like to call essential food. So, and we've seen in the previous downturn we had that sort of our basket is well aligned. Sort of, if things get tough, people move to our products. But we need to make sure that our price points are in place for the consumer.
Of course, you've come through a period where you have had lots of settlements with the Competition Commission, and you had a 350 million rand fine. You also agreed to hold back on price increases to the tune of 160 million rand, which you've actually overshot by 11 million rand. Is all of this out of the system at this stage?
Yeah, we agreed that we would give through some benefit to the consumer, and we've done that now. That's finished. Obviously, there is still some cash flow. We still have 2 chances to pay, and they'll be in the next 2 years in terms of our penalties that we have to pay.
Of course, you've resumed your dividends to payments to shareholders. 40-cent dividend from nothing last year, 36 cents the year before, so going to be welcomed by the market. Are you now going to resume these dividends going forward from here?
Yeah, we have some covenants that we need for the banks that we need to look into, but what we can afford we will give through to our shareholders and come back onto a normal dividend policy.
Just looking across the divisions, where are you seeing the soft spots at this point, and where are the hurdles? Because just looking across some of the divisions, Bokomo, revenue up 6%, operating profit down 2%. What's happening there?
Yeah, I think in the Bokomo side of the business, costs came through quite strongly. We had to look very carefully again at the price points. We also have some once-off costs. We're busy commissioning some big plants. I think we know about the biscuit factory we're doing. So there are some once-off costs, but we're still comfortable with what's happened in the division. And
when will the new biscuit plant be commissioned and be operational?
Yeah, we're looking at the next 3-4 months. We will start to supply product to the market.
So that will have continued through into the second half of the year?
Yeah, I think the once-off costs will still be there for say 4 or 5 more months, but we'll see the benefit in the new financial year.
And you're also affected by floods in the Orange River last year, and that's affected your raisin crops.
Yeah, the raisin crop this year is the lowest in I think about 20 years. So that obviously will affect our business, but that will only start in the new financial year. We are still busy finishing off the previous crop that came in.
Now, your biggest division, Sasco, revenue up 5%, so it makes up over a total of group, over half of the total group revenue. Operating profit down 24%. This is the division, though, that was affected by those commission penalties, wasn't it?
That's it.
And how, operationally, how are you doing over there?
No, I think Sasco did fairly well. We did get some good benefits in terms of volume increases, so the volumes in the Sasco business was good. So we're very comfortable. We also got some market share gains, so there are some good news there.
It's also the division that's affected by rising global commodity prices, though, isn't it?
Very much the effect there, and as I've explained, so we need to look at our price points very, very carefully.
Agribusiness, revenue up 3%, operating profits up 13%, so the margin improving from 5.9 to 6.5%. And it looks like everything was playing in your favour in the agribusiness over the period.
Yeah, we were happy with the results of the agri side of the business. This year, the on-farm performance was excellent compared to the previous years. So quite a few of the plans in terms of biosecurity we put in place started to work for us. But I think that applies for the whole of the industry. I think what helped there was the lower cost that came through.
And the fourth main division, Ceres, revenue up 6%, operating profits up 12%. So it looks like the juice business also doing pretty well during the period.
We're very happy with the juice business. We had a very, very cold and wet winter, so that obviously is always negative. But I think the strong brands came through for us very well, and we're very happy with the volume we got there.
How are you seeing competition from other players in the food space in an environment like this?
Yeah, I think sort of obviously very important for us. We need to look at our price points. CapEx is a big thing in our life, and we're investing a lot of money into capital. So we are positioning ourselves for growth that we will believe will come. So we look very much at sort of our own picture in terms of that. So we are very positive about the future. We think there will be growth. We are spending capital. Obviously, the benefit that will come through is job creation. I think that's also important to us. So we're very positive.
And where specifically are you focusing for that growth? Where is that capital being spent?
I think what we spoke already about this afternoon is on the biscuit side. So also on the juice side, we are creating quite a bit of new capacity here in Gauteng. We will also look at the wheat pig side, some new capacity on value-added products. Then we added some capacity on the right side of the business and also on the agri side of the business. So across the board, we are looking at our capacity that we have in space.
And just for the second half, while you are a bit cautious, do you think you'll be able to match the performance that you saw in the first half of the year?
I'm so very optimistic. I think our product basket is very well aligned for the consumer.